Hello and welcome to the week ahead from the Financial Times in London. Here are some of the big stories we'll have our eyes on this week. A UN tribunal plans to make a ruling on disputes in the South China Sea between China and the Philippines. The aluminium giant Alcoa, which is undergoing a major restructuring, opens the US earnings season. And the Bank of England Monetary Policy Committee meets for the first time since the UK voted to leave the EU to discuss how to support the British economy. First, geopolitical tensions in the South China Sea have ratcheted up in recent years, and this week should see the first international ruling on the much contested claims made by China in the region. A UN tribunal will decide on a case brought by the Philippines in 2013 to the International Tribunal for the Law of the Sea, based in The Hague. Although the case revolves around technical aspects of maritime law, the ruling could be of great significance by clarifying several issues at the heart of the area's territorial disputes. However, China's foreign ministry has said it doesn't recognise the court's authority.
中方不接受、不承认所谓的仲裁庭及其判决，是维护联合国海洋法公约、维护南海各方行为宣言，是真正的依法办事，维护国际法治和规则。中方的立场不会改变。 妄图通过外交施压和舆论炒作，让中方接受有关裁决结果，这只能是一种幻想。我们奉劝有关方面尽早放弃这样的企图，因为这种企图是徒劳的。
Experts expect the court to rule against China on a number of the cases, and while the tribunal has no powers of enforcement, if the ruling favours the Philippines, China's reputation is likely to be further damaged if it continues to pursue its claims. The Obama administration is already framing the ruling as a test of China's respect for international law, so the verdict could aggravate tensions between those two countries, which are involved in a broader contest of influence in the region. Alcoa, the US aluminium group that's been working to split itself in two, opens the earnings reporting season on Monday. By the end of the year, it will have divided into a commodity business and a company making specialised metals and components for industries such as cars and aircraft. The breakup plan has been welcomed by some investors, although Alcoa's share price has continued to track closely to the aluminium price, hitting a low in January but recovering somewhat since then. And as our US energy editor Ed Crooks explains, the commodity price remains one of the biggest challenges for the company.
The whole group is still very much affected by the price of aluminium, and that's going to be a dominant feature of these latest results. The price of aluminium is down about 15% since last year. It's actually recovered a bit during 2016, but it's still down compared to what it was a year ago. And as a result of that, we're going to see lower earnings for Alcoa, for the Alcoa Group, in the second quarter of 2016. Analysts think that they're going to make they will have made about 9 cents in earnings per share during the second quarter of 2016, and that's down from 19 cents per share, which they reported as underlying earnings for the second quarter of 2015.
And finally, this week we'll see the first meeting of the Bank of England's Monetary Policy Committee since the UK's vote for Brexit roiled markets and raised the spectre of recession for the British economy. Signs from Bank of England Governor Mark Carney that he's willing to prop up a faltering economy have seen futures markets point to an almost 80% probability of an interest rate cut this week and just over 20% chance of rates going to zero at the bank's next meeting in August. Economics reporter Emily Cadman has more.
Governor Mark Carney has already said that in his view, monetary policy easing is going to be needed over the summer. Now, the bank won't get its new forecast for the UK economy until August, but there is a mood of expectation growing in the city that the bank is going to want to act sooner. That could mean interest rate cuts as soon as Thursday. The bank does have other options of things it could do. For example, it could restart its quantitative easing programme where it buys assets, but most people are expecting it to wait until it has more information before doing that.
And that's what the week ahead looks like from the Financial Times in London. See you again next time.